Opendoor is quietly drifting down to a major support level. We will take a look at the Opendoor chart in this episode and see where we could be headed the remainder of this week. Also, we will cover the Stonkcast Watchlist, some other tickers you need to be paying attention to, and the major macro themes, including the market taking bad news as good news on Wednesday in the hopes of another Fed rate cut, and also the latest news on tariffs as the Supreme Court gets ready for their decision. All that and much more on this week's midweek check-in. As always, if you get value from these videos and you want to help us out with the algorithm, make sure to share with a buddy. Don't forget to like, subscribe, and follow us wherever you listen to podcasts. And now, folks, let's roll. I'm Brandon. Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate or a more conservative swing trader or investor, we've got you covered. If you'd like to support the channel beyond liking and subscribing, make sure to check the links in the description. All right, folks, happy Thursday. It's time yet again for the midweek check-in. We're going to kick it off with Opendoor as always here. Of late, the most captivating story in the market has not really been all that captivating this week. It's actually been quite boring. We're seeing some of the lowest volume that we have seen since July 3rd. In particular, Wednesday's volume was the lowest since July 3rd, which is just insane to think about. Really, over the past 5 months, we've had way more volume than we did on Wednesday. So what gives, right? We're going to jump into the chart here, take a look at what's been going on. So this is, for those on YouTube, a 9-month view of Opendoor. Obviously, we had the lows of 51 cents back in June. We had the highs of 1087, which are 3-year highs that we set, fresh off the news that Kaz was taking over as CEO back in September. But really, since then, we have been drifting down. We've had this descending level of resistance, and now we have a second one forming here. But we have had a lot of support at the $7 price point. We have had a couple areas where we've broken below that. But all in all, every time we've come down to the $5.70 level, especially in pre-market, which has happened a couple times, we have seen massive buying stepping in to push it back up. But if we just take a look at really the past week on Opendoor, folks, it has not been great for the bulls. We attempted to get above $8, late last week. That did not happen. And since then, we've had 4 consecutive down days on Opendoor. We closed out the session on Wednesday at $6.94, just a hair above that key 38% Fibonacci level. So if anyone's been, listening or watching the channel for a while, there was a point in time where I was calling out this massive bull flag here with 7 kind of being the base and this descending level of resistance here. Now, we're not exactly holding that same technical chart pattern anymore. However, 7 is still a very important support level. As you can tell here by looking at the chart, we've had multiple touch points at that $7 price point. And, basically what has happened, if we just take a look at the daily chart here, we had this low back on November 7th all the way down to $5.24. And then when we came back down in that region a little bit later on in late November, November 20th, November 21st, we set a higher low, which is good to see. And so now really at this key $7 price point, what you would love to see, at least from the bull standpoint, is another higher low, which would basically line up with this Fibonacci level. So if $7 is able to hold, we should see another bounce here, another leg up here. The volume has not been that great, as I was mentioning in the intro. We had volume on Wednesday right around 50 million. We haven't had volume that low since July 3rd, if my math is correct here. And so, July 3rd, we had just over 51 million shares transacted. So it has been literally half a year since we've seen volume that low on Opendoor. So we've had this descending volume that's really been going on since November 12th. That has just been continuing to dissipate. And so, as I've said, many times here, there's a few different ways that you can kind of view that. You can view it as, interest is going away from Opendoor. In this particular context, I don't think that's the case. I think the retail community is still very strong. The Open Army, Eric Jackson, Anthony Pompliano, a lot of people involved in this, Mike Alfred, right? However, I do believe that seeing this lower volume, especially on down days, is actually a bullish sign. Typically, when you see high volume on red days, that shows conviction. The same could be said for green days with high volume. When you see low volume on extreme highs or lows, that can show, basically a lack of conviction. And so, or just kind of an indecision point, right? So if we take a look at Opendoor on Wednesday, we had the lowest volume we've seen since beginning of July. We're at a key support level. Clearly, the bears did not feel confident enough to really smack this thing, below 7 out of fear of a reversal to the upside, since 7 has been a key support level. That's how I would interpret this. Obviously, we'll see how the rest of the week plays out. But really, Opendoor has been boring. And you know what, folks? That's okay. Especially if you're in this thing for the long haul. If you believe in the vision that Eric Jackson and Kaz, the CEO for Opendoor, like basically what he's laid out, this is a long-term play from that standpoint. Now, from a short-term trading standpoint, you could have a setup here right around $7 being a key entry point. So that could be something to look at. Now let's do a quick check-in on the options chain for Opendoor. So really, really low volume on Wednesday. Only 106,000 transactions happening on the options chain. You did have a put-to-call ratio of 0.30, so still bullish. You had 81,000 calls, 24,000 puts. But we are just seeing a lot of low volume. And take a look, folks, at the current IV percentile right now for Opendoor. This is pretty nuts. I can't even remember the last time I saw it this low, but 11%. 11% of the time in the past year, the past 52 weeks of trading, the implied volatility has been lower than it currently is. You are getting bottom of the barrel, so to speak, implied volatility. So if you are a buyer of premium, whether to the call or put side, this is when you want to be getting in, when you see that IV percentile so low like that, right? So just something to point out here. Obviously, Opendoor has not had a ton of volatility lately. It's been kind of quiet, kind of dormant. We've seen volume dissipate, and really nothing has changed fundamentally about the business. We're just waiting for that next headline. Obviously, we got some macro tailwinds potentially with the Fed rate cut coming next Wednesday, which could give a boost to Opendoor. But overall, as of right now, just there's no news. And sometimes it's like that, right? So there's not a lot to talk about with Opendoor. I think from a technical standpoint, of course, we want to see $7 hold. If that breaks, we might see a drop yet again down to that 570 level, which is the 50% Fibonacci retracement level. Hopefully that doesn't happen, but those are some of the key levels that we're looking at right now. All right, let's move on to the Stonkcast Watchlist, some other tickers you need to be paying attention to. So first of all, I want to highlight Bitfarms. We've been talking about this one for a while here. It's a Bitcoin miner getting into the data center play, which is a big thing right now. It's heavily tied, of course, to Bitcoin. Bitcoin had a pretty big sell-off down into like the mid 80s, right? Not that long ago, like 84, 85,000, found a floor there. And now is starting to recover back above 90,000. And so we're seeing a recovery naturally also happen in Bitfarms. So Bitfarms is back above the 61% Fibonacci retracement level as of November 26. It is also back above the key psychological level of $3, which I like to see. Taking a look at the close that we saw on Wednesday, we did get a close above the 20-day moving average. Nice little hammer candle formed here on the chart, so that's great to see. And, really the next level for me, what I'm looking at with Bitfarms, I want to see it get above 350. 364 is that 50% Fibonacci retracement level, and we've seen that area, 364, be support for Bitfarms back on October 22nd and also on November 4th. So could support become resistance? How strong of a retracement are we getting here? If Bitfarms does get a push above that region and claims it again as support, that's a very bullish indicator in my opinion. So this is one to be paying attention to. Also taking a look at CIFR, also in that data center play space. This one looks very good. We're holding the 50-day moving average as support. Great to see. Nice bounce on Wednesday there. So love to see that. And I would fully expect CIFR to reclaim those highs of 25.50 that it set back in early November. The chart looks incredible right now. I would love to be taking a play on this. Also, we have to talk about Beyond Meat, which does appear to be, getting some attention yet again. We saw some super big retracements on Beyond Meat after the run up to $7.69 that we saw back in late October. I mean, we had lows here of 80 cents. I mean, this thing almost did a complete 100% retracement from that 769 high, but it does appear that we have found a base. Volume starting to pick back up again on this one, which is interesting. And we did close Wednesday's session at $1.25. 2 days prior to that, on Monday, we saw a nice 35% green day on Beyond Meat. So volume is flowing back into Beyond Meat. Definitely want to have on your radar. As far as the put to call ratio on this, very bullish. 0.23 put to call ratio here. Almost 250,000 options transacted on Wednesday. So the options market is definitely flowing on Beyond Meat. As far as the volume weighted moving averages, as you can tell here from this top left corner here, the stage that Beyond Meat is in from a daily chart standpoint right now is accumulation. So that is good to see. Next level of resistance here, at least from a dynamic resistance standpoint, would be the 50-day moving average of $1.62. And then I'm looking at the next fib level of 204, just a hair above that $2 psychological level. If we get above that, might be able to make a run to 250. So that's what I'm looking at in the near term on Beyond Meat. If you got any other stocks you're paying attention to, make sure to drop a comment and let me know, and we will take a look at them and see if they're worthwhile as far as adding to the Stonkcast watch list. All right, let's move on to the major indices. First of all, I want to take a look at the S&P 500 via the ETF SPY, and we are not that far off all-time highs yet again, folks. We closed Wednesday session at 683 and change. We have the all-time high at 689 and change. So really just about $6 off on SPY of a new all-time high. We are definitely in an accumulation stage on the daily chart yet again for SPY. And, I talked about this on the market prep video on Sunday. The fact that we got back above the 50-day moving average was a key indicator that the rally was still on. And especially with the hopes of a Fed rate cut coming, it makes sense that we are seeing a nice recovery and rally now in the S&P. No major no major geopolitical news to disrupt the rally as of yet. And so it does seem like, it's only a matter of time until we hit a new all-time high yet again here. So I think you had a lot of people that were speculating on a Fed rate cut in December that bailed out when we saw the odds drop. And now that the odds are returning in favor of a Fed rate cut, we're seeing some of that buying happen again here. So that's where we stand there. Taking a look at the tech-heavy NASDAQ via the Qs ETF, same story. Back above all major moving averages. You got an all-time high of 637 on the Qs. Closed Wednesday session at 623. Not that far off either. And you had SPY on Wednesday up 0.3, a little more than 0.3%. And you had the Qs kind of lagging a little bit, up 0.25% on Wednesday. Quick check-in on IWM, small caps ETF, and small caps, folks, were cruising on Wednesday, up 1.82% on the day, almost 2% on the day. And currently sitting at, as of Wednesday's close, 249 and change. And we have an all-time high of 252 on IWM, so not that far off there. Obviously, small caps benefiting from the odds of a Fed rate cut. Quick check-in on the VIX. So the VIX continues to come off, which is good to see, back below the 200-day moving average, below 17, and looks like it might just crack 15 on Thursday, depending upon how the session goes. But as of Wednesday's close, just a hair above 16 on the VIX. And at time of recording, quick check-in on Bitcoin via TradingView. At time of recording, Bitcoin is up 2.55% on the session, looking fantastic, sitting at 93,643. We did manage to get back above the 38% Fibonacci retracement level on Bitcoin, which is excellent news. I called this out on Sunday's episode, which was, right around 91,500. And we have gotten back above that nice breakout candle above that zone or that area that happened on Wednesday. And really now, the next key test, I would argue, would be the key psychological level of 100,000. So it's good to see Bitcoin recovering here. This is TradingView for anyone interested in new trading software. Make sure to check the link in the description and get $15 off. All right, let's move on to some macro news. First of all, I want to take a look at this piece from MarketWatch. Stock market closes on doorstep of record territory as investors focus on bright side of weak private sector hiring. All three major U.S. stock indices logged back-to-back gains on Wednesday after an unexpectedly weak private sector hiring report helped solidify expectations for a quarter-point interest rate cut from the Federal Reserve next week. The latest advance brought the S&P 500 and Dow Jones Industrial Average to within striking distance of their record highs, while the Nasdaq wasn't far behind. The Dow finished higher by 408.44 points, or 0.9% at 47,882, the third highest closing level in its history. The blue chip gauge is now within 0.8% of its record high that was set on November 18th. Meanwhile, the S&P gained 20.35 points, or 0.3% to end at 6849, off just 0.6% from its October 28th record close. Payroll processor ADP reported early Wednesday that privately run businesses eliminated 32,000 jobs last month for the biggest decline in more than 2 years. That appeared to help boost investor appetite for risky assets like stocks. Global strategist Gary Schlossberg at Wells Fargo Investment Institute summed up Wednesday's market response by saying bad news is good news again, to the extent that the odds of a rate cut at next week's FOMC meeting have gone up a bit. The market implied likelihood of a Fed rate cut next Wednesday rose to 89% after the data was released, up from 66.8% a month ago. Traders also factored in a bit more easing for 2026 than they had previously thought, on expectations that President Donald Trump will select Kevin Hassett, a top economist in the Trump administration, to become the central bank's next leader. Hassett has spoken out in support of aggressive interest rate cuts. So we continue to see a nice rally in the markets, and as the article mentioned, if we take a look at the Fed Watch tool via CME Group's website, as of right now, the odds of a 25 basis point cut happening next Wednesday are 89%. And it has been a roller coaster in terms of whether or not the odds are up or down. I mean, if we just take a look at where they were at a month ago, they were at 66%. It wasn't that long ago, they were basically a coin flip at 50%. And, the fact now that they're at 89% seems very good. The odds that we'll get that 25 basis point cut next Wednesday, that should be good news for small caps, and especially, a company like Opendoor that is so dependent upon the Fed rate decision, especially as it relates to mortgage rates and unlocking liquidity, things of that nature. So that's where we stand right now. All right, let's take a look at this piece from MarketWatch. The Supreme Court's ruling on Trump's tariffs is looming. His Treasury chief says this is the backup plan to keep them going. U.S. Treasury Secretary Scott Bessent on Wednesday expressed confidence that the Supreme Court will rule in favor of the Trump administration's many country-specific tariffs, while also saying administration officials are ready to maintain the levies through other avenues. Bessent's comments match up with forecasts that President Donald Trump would respond to a court loss by switching to invoking authorities granted in Sections 301 and 122 of the Trade Act of 1974, as well as Section 232 of the Trade Expansion Act of 1962. He said, quote, "We can recreate the exact tariff structure with 301s, with 232s, with, a 122, the Treasury chief said during the New York Times Deal Book Summit in New York City. When Bessent was pushed on whether those options would provide a permanent solution, he seemed to indicate that would largely be the case. The 122s are permanently, but the others we can do it, he said. The Supreme Court is preparing to rule on whether Trump exceeded his authority this year and using the International Emergency Economic Powers Act of 1977 to justify the bulk of his tariffs. Opponents of Trump's IEEPA based tariffs have emphasized that the law doesn't explicitly mention tariffs and that no president has ever used IEEPA to impose tariffs. Lower courts have ruled against Trump. The case does not affect his many sector-based tariffs. So this is obviously a story to be paying attention to very, very closely, because depending upon how the Supreme Court rules, I mean, tariffs are meant to be a big revenue generator for the U.S. government to help with the overall deficit. And so if the Supreme Court rules that these are no longer valid, that is a big U-turn for the markets as it relates to their expectations for the U.S. government and how it's going to generate money, how it's going to generate revenue. And then the question becomes, if tariffs are not legal, then you got corporations that are going to be questioning whether or not taxes are going to be raised on them to compensate for the lack of tariffs. So basically the way it's been explained to me in layman terms is you can either do tariffs or you can raise tax rates for corporations, right? Those are basically the two avenues right now. And so it's going to be interesting to see how the Supreme Court rules. Obviously, there's a lot of Supreme Court justices that President Trump himself has appointed. So you would venture to say they maybe lean more towards supporting tariffs, but who knows? But according to Treasury Secretary Scott Bessent, they do have a backup plan in case the Supreme Court rules against them. So that'll be something to pay attention to. And right now it does seem like Scott Bessent is President Trump's main guy that he wants to appoint to replace Jerome Powell in May when his term is up. So that is an interesting piece as well. And I think that's part of the reason why we've seen the market rallying of late, because they're anticipating a dovish Scott Bessent taking over as the Fed chair, being appointed by President Trump next year. So that is also very interesting. But as of right now, we're just waiting to hear from the Supreme Court and basically what the ruling is as far as the exact date when they're going to come out and basically talk about their findings or their rulings. I haven't exactly seen anything as to the exact moment when that will happen, but I'm sure leading up to it, we will continue to get more news on it. The article says the country's high court heard oral arguments in the case on November 5th, and Trump's chances of winning dropped in prediction markets after some conservative justices' questions for the president's attorney were widely perceived as especially skeptical. So that's all we got right now. I guess we'll wait and see what happens as it relates to that. It looks like January 21st actually is when we may get a decision. So we will continue to pay attention to that. Now let's move on to the economic calendar. So talking about that bad news is good news for the markets. We got the ADP non-farm employment change for November, which came out on Wednesday morning. We had a forecast of 5,000, but actually we lost 32,000 non-farm employment change there. Basically the private sector, 32,000 jobs that we lost there based off of what was forecasted. So yes, that's bad news, but the market's taking it as good news because they're assuming that the Federal Reserve will weigh the negative labor data more so than their concerns about inflation and therefore cut another 25 basis points next Wednesday. So that's what we got there. We also had some ISM non-manufacturing PMI, which came in decent at 52.6. As far as today, Thursday, December 4th, initial jobless claims come out at 8:30 a.m. And then Friday, December 5th, the Fed's preferred inflation gauge, PCE, personal consumption expenditure, comes out at 10 a.m. Eastern. All right, let's do a quick check-in on earnings this week. For today, Thursday, December 4th, you got Kroger's. We're going to get Toronto Dominion Bank, Dollar General Corporation, all before the bell. And then after the close, you got DocuSign. You're going to get Hewlett-Packard Enterprises, Ulta Beauty, just to name a few. So that's what we got for earnings. Pretty light week as we wrap up Q3 earnings season. But still some names to pay attention to if you are an active earnings trader. All right. So that's what we got for the midweek check-in. Not a lot going on, I'll be honest. Things with Opendoor have been kind of dormant, kind of quiet. Honestly, I think Bitfarms and Beyond Meat have been more entertaining of late. But hey, let's see what happens with Opendoor. If we can hold that $7 price point, get some momentum and FOMO buying returning to the stock, we could see an interesting end to the week. So make sure to drop a comment. Let me know what your thoughts are. If you're holding Opendoor, if you're watching from the sidelines, any other plays you're involved in, let me know what you think is going to happen with the Fed rate decision, with the Supreme Court's rulings on President Trump's tariffs, all that and much more. Never a dull moment in the market, even if right now seems a bit boring as relates to Opendoor. So appreciate all the support as always. Make sure to share with a buddy. Don't forget to like, subscribe, follow us wherever you listen to podcasts. And folks, as always, remember, plan the trade and trade the plan. Have a good one.